Hi guys, welcome to another episode of Unscripted with your host Mikey.
And Danny,
Yay. Yeah, today we're just gonna yap about whatever we find to be interesting.
about whatever.
Yeah.
Um, well, I wanted to start with an interesting topic.
Mhm,
So I guess there's been a lot of talk in the news about affordability and stuff, and I was curious how that. Um, I was curious. There's a lot of claims also that wages have not been keeping pace with the cost of living, which I agree it's true.
mhm,
But at the same time, I found this chart of median household income in the United States adjusted for inflation,
mhm,
and it does look like it's been increasing. It's been on an upward trend over the past couple of decades,
mhm,
which is, I think, a good sign. Yeah,
mhm,
that it's not been. I guess if it was flat, it just means that it's on par with inflation.
mhm,
If it's increasing, then it means it's not just keeping pace, but it's also increasing above inflation.
mhm,
And if it's decreasing, if the trend's decreasing, then it's not catching up to inflation, and people's purchasing powers are um, getting reduced. But it looks like it is on an upward trend,
mhm,
even though it looks like the period from like 1998 to 2015, 16, maybe 15.
mhm,
Yeah, it's been sort of flat.
mhm,
Um, but I guess it kind of makes sense. There was the dot-com bubble, and then there was the 2008 crisis, financial crisis, which had market impact on the economy.
mhm. Yeah.
But yeah, I mean, the past decade or so, it's been, I'd say, from like 2014 onwards, I mean, wages have been just increasing in a pretty notable pace, notable
Mhm,
clip.
mhm, mhm,
This is from Fred. This is Federal Reserve Bank of St. Louis.
mhm. Yep. Okay. Yeah, I think that's interesting because I don't know, there is a lot of media talk about wages stagnating in comparison to, I think like, yeah, like in comparison to, for instance, executive compensation or what is it, like people who own, um, yeah, like a significant portion of like the US stock market, like how does that compare to
Yeah.
typical, I guess, like wage earning, um, a typical wage earning person per se. So I guess it's, optimistic to hear that. I guess like wages are increasing like in real terms. But I think like how is the inflation calculated and is it representative of the true cost of living? Is it just based on, I don't know, the CPI, which is just like a basket of goods and services in the economy? Or
Yeah.
does it also account for the increase in home prices and the cost of living, not just like, the price of goods and services, but also the actual, like, is it reflective of the cost of um, basically existing? So I don't know. I feel like
Yeah. Does the CPI include like rent though?
I don't think it does. We can Google that. Does the
No,
CPI include rent and housing? Okay, so I guess it does.
it
It's
does.
included in the shelter category. Hmm. I don't know. Yeah, I guess. Okay, okay, okay. Okay.
Well, there's this weird dichotomy, I think, of like, I
Mhm.
think it's what people are talking about. Like the economy is doing well, but
Mhm.
like but people sentiment, like the sentiment is not great.
Yeah. Yeah.
So that's something I think that's interesting to look into. Like what's contributing to that? Why are people so pessimistic?
Mm. Yeah. I feel like, it's the zeitgeist and it's narratives and interpretations that you hear from other people. And yeah, I think it's fair to say that, a lot of people feel like, there is a vibe session and obviously like there is one because you just
I
kind
think
of
it,
sense like
yeah,
a
yeah.
loss of
I do think
confidence.
it goes back to like what we were talking about last week about the K-shaped economy, where
Yeah.
there's that widening gap, and so
Hmm.
um,
Yeah.
that extreme polarization, I think, could cause a lot of people, I mean, a subpopulation, to be really pessimistic, and
Yeah.
you know,
Absolutely. I do think that the K shape is, representative of the extremes, right? Like of society.
hmm
But I also feel like, I don't know, like life day to day is not always about, I don't know, like analyzing, I don't know, where we are on the totem pole, so to speak. Of course, there is like
hmm
that aspect of, you know, considering like where you rank amongst your friends and your peers, especially when you're younger. But I think, I don't know, at
Yeah.
the end of the
I
day.
do think, but I do think that sort of, and I agree,
Mhm.
but I do think that kind of wide gap between the halves, or the widening gaps between the have and have-nots, is probably what's contributing to the negative sentiment.
Yeah.
And especially, I think, with social media kind of always promoting content that's more antagonizing or more extreme viewpoints,
Hmm. Yeah.
probably is what um, is contributing to the bad vibes of the
Hmm.
current time.
Yeah. I think it's a lot of different things. And I also admit that I don't have enough knowledge to really like, not knowledge, but like lived experiences to really comment about like all facets of this phenomenon that we're discussing. But
Mm,
I think that, yeah, I don't know. It's to a certain extent, it is like a self-fulfilling prophecy in terms of like, well, if, we're not really confident in the growth of the economy or just like in our ability to earn more money and spend it, then obviously we're going to spend less money. And that ends up causing or like in effect leading to, right, like a recession because of this perceived belief or notion that things are getting worse. Therefore, like we're taking a defensive stance. And then
yeah.
things do end up becoming worse because of our belief and our anticipation that things are getting worse. So I think that's part of it. I don't think that's like the full story.
Mm,
But yeah, I do think that, this does have ramifications on, yeah, the vibes, which I
yeah.
think largely are negative right now. So,
Yeah.
um, yeah.
It's interesting. I'm just like glancing at my daily news feed, and apparently there's an article that says BlackRock warns that investing in the S&P 500 isn't enough for retirement,
Hmm.
and they're recommending a strategy that prioritizes income.
Income as in like fixed income investments like bonds and like treasuries or
No, I think it, it's I think it's more like private equity.
oh, I see. Okay,
Or like
interesting.
maybe real estate, maybe
Uh-huh.
REITs.
Uh-huh.
Um, yeah, the
Do
investor may
you
need a portfolio designed to deliver a steady stream of income, a
uh-huh.
shift towards a paycheck for life model in retirement.
Uh-huh. Do you agree or do you disagree with their analysis?
Okay, so this is like the thing. I think they have their own sort of motivations for
Yeah.
promoting it. They are a private equity. Of course, they would want people to
Right.
invest in private equity. Um, I do recognize also that there is some truth in that. I mean, not just a grain, but there is some truth that private uh, equity is one of the fastest growing asset classes.
Hmm.
There's some people that say that it's been strip mined, but I think there's still a lot of opportunity out there,
Hmm.
disruptors out there that have a lot of growth potential. That would be nice
Hmm.
if everyday mom and pop folks are able to get access. But I think it's also sort of a buyer beware sort of situation where
Hmm.
because these are private companies, you just really don't know.
Yeah.
There's a lot more risk.
Yeah,
Yeah.
for sure. I don't know. I mean, I feel like I'm not too familiar with like private equity as like an investment,
Mm.
or as an asset class within itself, but I do think that, yeah, just based on, I don't know. the vibes and
Yeah,
the
there's
amount of
this
uncertainty in every single asset class, right now.
yeah, and
It's
there's
cool.
this thinking for some investors around
Mm.
the what's called like a 50/30/20% allocation. So 50% in equities, 30% in fixed income,
Uh-huh.
and then 20% in quote unquote alternative investments, which
Hmm.
includes
Hmm.
I guess I feel like gold is also like an
Hmm.
alternative investment.
Yeah.
Like fall into this alternative class. I feel like I would classify that as like an alternative.
Hmm.
I think REITs may also fall into this class. I think I read somewhere that also like there's some I forget there's just some other financial product that could be considered an alternative investment, but private
Hmm.
equity certainly is.
Right.
Yeah, so private real estate.
Hmm.
Um, oh my God, what are other sort of
Hmm.
uncorrelated? I think the key is uncorrelated.
I think, right, another argument lately is that all asset classes have lately started to be all correlated. Like with each other. I think it used to be the fact that like gold used to be a hedge against like, public equities and I don't know, like real estate was once seen as, an asset class that was uncorrelated with other asset classes. But I think like the narrative that these asset classes are uncorrelated incentivizes both institutional investors and retail investors to believe like, oh, like, yeah, let's like diversify, right? But the fact that I guess that ha belief has become so commonplace, I think that kind of ultimately contributed to the correlation of all of these asset classes together into one big, I don't know, upward
It's all
trending.
tied together. I
It's all tied
agree.
together at the end of
It's
the
all tied
day.
together.
Yeah. Yeah. Because
I
everyone's thinking like, oh, even like institutions even like are thinking about, oh, where are we going to put our money in a way that will protect us in the event of, XYZ uh
Yeah.
event. And I think just like the that thinking and the prevalence of that, especially in uncertain times, kind of causes every asset class like bundled up together to move in the same direction. So we're seeing
Yeah.
gold
Yeah.
go like up, even if like the S&P is also like trending upward because of, I don't know, like
Volatility,
volatility,
yeah.
uncertainty, XYZ. Um,
Yeah.
yeah, I think that's part of what's going on. Um,
It is a good question is like, can we expect markets to go up forever? That's like
right, right.
kind of the
Yeah.
the
Is
real,
unfettered growth sustainable? And, I think it ties back to like, where
yeah.
is this growth coming from? At whose expense? Who's being exploited? Or is everybody benefiting? There's a lot of interesting questions, I think that, we
I
don't
know,
necessarily have the answer to.
yeah.
We can only speculate, but yeah, I think, yeah.
I mean, hopefully in the future, the only people that are being subjugated are the AI people.
Right.
Like they do all the hard work and the humans can just enjoy themselves.
Mhm. So then, yeah, it goes back to the question of like, what is enjoyment? What, I don't know, what is a good life?
I
And
think just like having like freedom of choice, having
mm,
the ability to say, I want to do this, I don't want to do that.
yeah,
Yeah, optionality is important.
uh-huh, yeah.
I was reading something. It talks about like happiness being. There was another article that, remember how like there's all this article, article or book about how like if you hit 75K a year in income, then you kind of reach your peak happiness. Apparently that's been debunked.
Well,
It's
I think there is, right, like debunked in terms of like we're not denying like 100% of it. I think 75K. When the article came out, it was like 2015, 2016. So like inflation adjusted figures is probably like, I don't know, it's been like 10 years since then. So maybe 90 to 100K is what we're
mhm.
looking at in today's dollars. I think, right, like that's like a, I don't know, comfortable income, I think, to have like your basic necessities met. But I think it really depends on your temperament, what you've grown up with, what you're used to, and what you aspire to have. And that's different for everybody, right? So I think to make one blanket statement and say 75K is like the optimal amount of money to have for like maximum happiness, and like more money won't necessarily make you happier. I think like that applies to a certain subset of people for sure. Um, but I don't think it applies to everybody. And I think there are people who genuinely are happier with more money. So
Yeah.
I think the debunked part is kind of like, oh, sure, but yeah.
I don't know, I've always been skeptical of that 75K figure. Like I always felt like just in terms of again more optionality, like
Yeah.
sure you may be happy with like, 100K a year or whatever, but there's always the benefit of being able to do more with your
Mhm.
time to I don't know, create things,
Mhm.
explore passions that is just not accessible to you at 100K versus like 200 or 400 or a
Oh yeah,
million.
for
And I
sure.
think that's just like, I don't know, part of that self-actualization. I think that is,
Yeah.
it does take, you know,
Mhm.
unfortunately, wealth to be able to achieve.
Right, right, right. It takes
Um,
wealth, it takes privilege, and it takes access to different experiences, which I think a lot of them, those said experiences, are paywalled in today's society. Um, right,
yeah,
which I guess is a bit pessimistic, but at the same time, I think, yeah, um, I don't know. I think money gives you choice and optionality, but I think it also assumes that you know what you want to do with that money, and like you know exactly what, not that you know exactly, but it gives you the ability to try different things.
yeah, for sure.
And it
For
cushions you
sure.
from like, risky decisions and behaviors that, could go sour, that it kind of bails you out in case things don't work out.
Yeah.
And it's
You'll
it's
still
kind
be
of,
okay.
yeah, it's psychological. I mean, right now money has value because we believe it has value. Uh,
Mhm.
right now we're running on like a fiat currency model where I think, yeah, it's valuable because it's only as valuable as other people are willing to believe in it as well. And I think when, you know, I don't know, there's this argument of like, would you rather spend the money now, like while it has value, or like in the future when the value of the money you have is uncertain and I don't know.
Yeah. That's true. That's true. Nothing is for certain.
Right.
Okay, this is really funny.
Sure.
Do you know this company called Masterworks?
No.
So apparently fine art has shown itself to be a really effective uncorrelated asset
Uh-huh.
to the S&P 500,
Okay.
and Masterworks has created this index
Uh-huh.
um that's kind of pegged to the price of like contemporary classic artworks
Uh-huh.
that people can now invest in as a way to hedge their sort of investment portfolio.
Oh, interesting. Okay.
Yeah, I
Yeah.
went to their website and they have this index called the Art Price 100 versus the S&P 500.
Okay. It's funny because like, what is it? The
No, you
S&P
should check it,
500.
check it out. It's doing apparently very well.
Sure. Okay. Yeah, I mean, I guess if that is a way to diversify risk, like I'm all for it. But I think a part of like art investment is, I think, I don't know. I forget what the tax benefits of like investing in art are, but I'm
Oh,
sure
there are
there's like,
great tax benefits
right,
apparently.
right, right. So,
Yeah, well, you can ask someone to write down a valuation specialist to write down the value of that art, and then that's like a
uh,
tax shield.
yeah, yeah.
So really interesting.
Hmm. Hmm.
But then I'm like, okay, you write it down, it's a tax shield, but then at some point you need to like, I guess, and then I guess you can spread it out over several years
Hmm.
of I don't know the exact precise amount of it, but like I'm wondering like at a certain point, wouldn't you have to like sell the artwork or
Yeah,
but I guess you don't really have to. You can
right.
just keep it forever.
That's true.
And then I don't know if there's a step up basis. Like when you die, I guess when it passes down to your heirs, I guess they can mark to market the
Mhm.
artwork without needing to
Right.
pay a tax on the maybe it's like
Mhm.
maybe it's like I don't know the way that people pass down property or something like that.
Mm-mm.
Oh God, this is terrible tax advice. Don't listen to me.
Don't listen to us. We're just yeah, yapping. I did hear from another friend who, is an economist, and he was like, the funny thing about what is it, money is like, why do people leave bequests? Like, if you think about it, it's a suboptimal way of like, right, like maximizing your enjoyment throughout life. Like, wouldn't you want to die with zero? Or like, which is like the title of like a book that
Yeah, that was
someone wrote.
zero.
Yeah, Die with Zero, where it's like you maximize your happiness by spending like all the money you could have possibly um
But
earned
like
throughout
you
your
don't know how
lifetime.
when you're gonna die. That's the
No,
problem.
exactly. So it's like, I don't know, it's a little bit counterintuitive, but I think what he meant was like, why do people leave bequests of such huge, huge, huge amounts, even if they know that, right? Like they could have spent more like during their lifetime. Like why did they choose to continue to
I think it's just like the mental stability.
mm,
Like
mm, mm, mm,
I feel like you're just trying to like aim for that end. It's like,
yeah.
and it's also like tying your lifespan to your assets, like watching it slowly dwindle and then realizing like, oh, like at the end of it, like I'm not gonna be alive. It's just,
Yeah. Yeah.
I don't know. That's an amount of anxiety that I don't know I'm happy with
Mm, mm,
contending with. So
yeah.
perhaps it's effective for some people. I don't know if it's,
Yeah.
yeah. It's just nice knowing that there is a portfolio that can sustain your lifestyle in a sustainable way.
Yeah.
And that's like
Yeah.
also, and
Yeah.
then also I think it's nice to be able to give your descendants like,
Hmm.
um, some benefit or be able to say like, hey, I want to, donate X, Y, and Z to my favorite charities that'll, do some good in the world,
Hmm.
hopefully.
Yeah.
Did you read about Melinda Gates? Apparently, she gave a bunch of money to a bunch of charities in a very quick, efficient, um, way.
I
It
did
was
not
in the
know
New York
that,
Times.
but yeah, good for her.
Good for her. Good for her.
Yeah.
Yeah,
Yeah.
giving back.
Hmm. Yeah. Money is such an interesting thing. I still feel
It
like,
is.
right?
It is.
There's so much to be demystified and like, I don't know. I think, yeah, and there's so many different ways that, everybody thinks about it, and the accumulation of it is quote unquote the market. And I
Yeah.
think in some cases, like money gets worshipped a bit too much, and in other cases, it's underappreciated. Um, but yeah, I think it's important to
Where
have.
is it underappreciated, do you feel like?
In what sense? I feel like
Yeah.
I don't know. Like there are people who simply write off like, oh, like, money can't buy happiness. But there are things that, like yeah, a lot of these myths, right? Like that money can buy
Yeah.
happiness or that money
Yeah.
can't buy happiness. I think, I don't know, underappreciates or underestimates the value that it could bring to or
Yeah.
overestimates, right? Like it's all dependent
That's
on,
true.
right?
I think that statistic of like 401k accounts by household, by like
Mhm.
person, by per capita in
Yeah.
America is like really stark. I mean, a lot of people don't have a lot in
Mhm.
their 401k around
Yeah.
retirement age, and it's really difficult.
Mhm.
It's a really difficult thing to contend with. It's like,
Mhm.
what will you do at retirement?
Right.
Yeah,
But there's a huge opportunity cost, right, towards, I guess, like locking up your money until you're 65 that I'm only starting to come to terms with. Like the idea of a 401k is like the price you pay is like illiquidity, right? For the sake of huge,
yeah,
huge tax advantage returns when you're retired. And sure, like that's, I think, in some sense beneficial, but I think like, if your emergency fund, for instance, like doesn't have enough to cover, I feel like it's a little bit unrealistic, like a lot of common sense, quote unquote, common sense personal finance advice, because everybody has different um exposures to risk in their lives. And right, I think,
well,
yeah.
there's yeah, I think it makes sense for, like W-2 workers, I would say. Like, I mean, honestly, I think it makes sense for a lot of people. Like, so
Mhm.
it's a tool, it's a tax shield, but it's also like you could also do a 72T or SEPP
Mhm.
withdrawal like plan to access those funds early.
Yeah.
Um, and it's like it's always nice to not have to pay taxes. And I think it is good for people who do not expect to have a ton of like withdrawal a ton from their 401k, like whose living expenses are moderate
Yeah.
in retirement
Right.
because I mean you have to pay taxes on the 401k, but it is at a lower tier,
Hmm.
and you pay less taxes today. So it is a nice benefit in that sense.
Hmm. Yeah.
Um, I do wish the IRA, this is a gripe I have with them. I do wish they would let everyone contribute to the Roth IRA without having to do the backdoor option. That's ri ridiculous. Like,
Yeah.
let's just change the laws to make it so that everyone can do it.
Yeah.
And um, I don't know. I mean, I do sometimes feel like lower taxes is always a good
Mm.
thing.
Right. But I guess it's just the implicit cost of like I'm not talking about a Roth IRA, but like just like a 401k of like locking that money up until of course if you're intentional with it, it's fine, but it's
You
also
can do
like
it. You can do an early withdrawal, a procedure that allows you to withdraw penalty free.
Okay.
Yeah,
That's fair.
yeah,
Yeah. I guess assuming like emergency events and whatnot, right?
yeah. What do you think of a 72T? Have you read about 72T?
I
I
haven't
see people.
I actually haven't read enough about it to really understand it, but
It lets you withdraw penalty free from your 401k.
okay.
If you adhere to IRS guidelines.
Hmm.
So like you have to withdraw continuously for at least 5 years,
Hmm.
or when you reach 59 and a half.
Hmm.
The payments must be substantially equal, made annually.
Right. Okay, I did hear about that. So I
Yeah.
do, yes, 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 yes. Yeah, okay. Got it. Anyway, we have about 2 minutes left.
Oh,
So speaking of the IRS, happy tax season, guys.
oh my God, do your
Do your
taxes.
taxes. Please don't forget to do your taxes. Oh my goodness. But yeah. Um, on the topic of money and being responsible in a world that feels largely irresponsible, how do we still stay sane? Let us know. Let us know how you are staying sane in an insane world. Um,
Yeah, also it's that sad time of the year where it's like, it's like post well, I mean, it's definitely post holidays and
mhm.
it's like cold and chilly outside. So staying sane is important. How
Yes.
do people stay sane in February, March in the Northeast?
Mhm.
Like anywhere cold, really.
Yeah. Yeah.
Yeah.
So anyway, thanks for
Tell us in
watching,
the
guys.
comments.
Yeah. Yeah. All right. Well, I guess this wraps up our podcast. Thanks for listening. Like, comment, subscribe, and
Thank
we'll see
you.
you in the next one. Thank you.
Bye.
Bye.